you. But as you have questions, please feel free to ask them. If you need a microphone, let me know. This court's pretty long, so we might be able to reach you. But if not, just talk loud. And I will definitely say, so I work with the WT Enterprise Center on Northwestern Street, and so we work with entrepreneurs every day. And what we hear all the time is, I need access to capital, I need a loan, I need investors, I need, microloan. There's so many different options, and so these people here today are going to help you navigate that, what works best for you. And so just as you have questions, please let us know. But first, I'm going to just have the panel do really quick introductions before we get started.
My name is Dustin Meyer. I'm the Local Government Services Director for Panhandle Regional Planning Commission. We're a regional council of governments downtown, and we represent the 26 counties in the Texas Panhandle. We work with all 26 counties and 63 municipalities. And really our department, we're a pretty wide-ranging department. We do anything from transportation planning, contract city management, project management, and then economic development, which is where we house that microloan.
Let's go. Dance with you.
I'm not used to courts these days.
I know, right? Hi, I'm Crystal Burns. My husband and I own Palace Coffee Company. We have 5 retail locations here in Amarillo, and then we have a roastery. And we've just recently started a consulting firm to help other cafes in small micropolitan communities open coffee shops of their own. So yeah, that's me in a nutshell.
Hello, my name is Amy Henderson. I am a business loan officer at Amarillo National Bank, and I get to help out entrepreneurs with their access to capital.
Hi, I'm Ryan Reber. I'm from Lubbock, but I'm happy to be up here today. I run the Lubbock Angel Network, so we're a network of angel investors that invest in different startup companies, kind of from early stage to late stage. And so we help facilitate interesting deals to bring it forth to our network and let investors decide if they're interested in investing. And we work with, there's about 13 other angel groups in the state of Texas. We work regularly with them, and about 300 across the U.S. And so we network and work with other angel groups across the country to look at what deals they're looking at and the deals that we're investing in, help those entrepreneurs fill out their rounds of capital by working with other investment groups.
And can you guys hear me okay? I'll let them use the microphone. Crystal, I want to start with you. You and Patrick have built this really great business, and I know you've had lots of different opportunities to get different kinds of funding. So if you'll share with the room a little bit about your experience and your story with that.
Sure. So we started our first cafe in Canyon, Texas, and we were fortunate enough with that location to partner with the Economic Development Corporation there in Canyon. So the Economic Development Corporation and the owner of our building basically split the cost of our renovations. So we went into a building that was vacant for 6 years. It was in great disarray, but the building owner, or the CEDC matched the building owner dollar for dollar for what he put into the building. So we were fortunate enough as small, brand new entrepreneurs. It's just me and my husband. We don't have any family money behind us. It is our blood, sweat, and tears, lots of tears, but all good things too. So we had to be really creative with how we got started, and so we were fortunate enough to find that. So we were able to get our first cafe open with equipment and furnishings only for under $100,000. With that first location, we did angel investors, actually. We had 3 businessmen that we just had a relationship with that really were not investing into Palace Coffee because they didn't know if Palace Coffee would work. They were investing into Patrick and Crystal Burns, which we're so thankful for because we would not be where we are without them kind of believing in us. So we kind of started there. We did a 5-year note with these 3 investors, and basically we took the first year with no payments. We just did a balloon interest payment at the end of the first year, and then we did payments and paid that off in 5 years with them. So we didn't do any bank loans. The bank wouldn't touch us because we were brand new and we didn't know what we were doing, but we fumbled our way through it, and here we are, we figured it out. Our second location is the most unique story because that is where we got the most creative. because we did have to pay for our renovations for our downtown location, which is in the old Paramount building on Polk Street. And that one, we did a combination of basically everything that you can do. We had angel investors, we had a microloan, we did a Kickstarter campaign, we did a bank loan, we did a traditional small business bank loan. Basically, we started with angel investors because we already had that relationship, so that some of our business friends reinvested. We had some that came in that wanted to invest. Then we went to the microloan, then we went to the bank loan, and we were just a little bit short. So we're like, well, we need $20,000 more, and we don't have $20,000. What are we gonna do? So we did a Kickstarter campaign, which is very kind of risky because Kickstarter is all or none. You go in and you say, this is how much we need, and you get people to back you, and you give them rewards for whatever, you have different levels of backing, but if you don't make your goal, you don't get anything. So you do this campaign for 2 or 3 months and hope and cross your fingers that you make your goal, and we did. We've actually run 2 Kickstarter campaigns in the course of owning our business, and both of them have been successful. I think they may have been, they're in the top level in this area of successful Kickstarter campaigns. So, and then once we got past that, then A&B really believed in us and just kept giving us money to open more shops. So it's been great. Now we just are partnered with them, and it's wonderful. A lot of people ask us if A&B owns us, and I'm like, kind of, but not really. So yeah, that's kind of our story in a nutshell. But so we've done all the things, and sometimes you do have to get creative as a new startup, especially if you don't have that financial backing that you need. But we kind of started in our personal finances, and before we even started a business, and said, okay, we've got to get all of our debt paid because we're about to put all of our eggs into one basket. And so yeah.
Perfect, thank you, Crystal. Dustin, next, can you explain to the group what the microloan program is and what a microloan is?
Yeah, absolutely. Like I said, I work for Panhandle Regional Planning Commission, and so I'm kind of the odd duck of the group up here. I work for a governmental organization, not an industry expert like a lot of these folks are. But one of the things, like I said, that we do is we do economic development planning on a regional level. So we do the comprehensive economic development strategies, which really assesses all 26 counties, what their needs are, what their strengths are, what their weaknesses are. And going back to about 2000, 2001, one of the things that we found was really access to capital on a much more personal level. And so we had some investors, consortium of banks came together to fund one of the microloans that we had, and then USDA actually provided the funding for the other microloan. So the microloan is exactly like what it sounds. It is a small loan. It is considered a non-traditional loan because it is smaller in size. So the larger banks, the larger financial institutions generally don't offer them. And I think the main reason there is whether it's a $30,000 loan or a $130,000 loan, the cost to underwrite it is the same. So the larger financial institutions really don't get into the smaller microloans. So a microloan is any loan from $500 to about $50,000. Our particular microloan with Panhandle Regional Planning Commission is $2,000 to $40,000. And like I said, it's a non-traditional loan. So generally, when you're reviewing a loan application, you usually like to have 4 legs to the stool. You look at collateral, how you're going to secure the debt. You look at equity, how much do folks have, skin in the game, how much are they putting in. You look at their credit worthiness, their credit score, and then you look at their repayment ability. How are they going to be able to repay this? So your traditional lenders like to have a sturdy stool with all 4 legs. With a microloan, it's non-traditional. We can look at it and hey, do they have 2 really sturdy legs? And maybe they're starting to grow that 3rd leg. And we can really look at these microloans on a case-by-case basis. And so since they're non-traditional, that's why you see a lot of these microloans are housed in usually nonprofit or governmental organizations like the RPC. So that's kind of what microloans are.
Perfect. Thank you, Dustin. Next question is for Ryan. Can you tell them a little bit about angel investing, and then maybe also give them an insight on what the perfect client looks like for an angel investor?
Well, I don't know if there's a perfect client, but I'll try to answer the question. So angel investing, the way, it's really important to understand the investment thesis of whatever group you're approaching. So every or group of organized capital, whether it's a venture capitalist or an angel investment network or even an angel investor, they sort of have a lane that they play in or an investment thesis. So it's really important to understand that first and foremost. For example, you could have one venture capitalist who would only invest at an early seed stage, and then you could have another venture capitalist who only invests at a late stage, and they'll only write a check unless they can write a $3 million check, and a company has at least $2 million in revenues. Like, you have to kind of understand what the investment thesis is before you're approaching an investment group. That's really important to understand. Angel investing. So generally, the way it's set up is, our organization is a nonprofit. We have investors that pay membership fees to be a part of the network, and they're there to see interesting deal flow. And the reason they're angel investors is because they really enjoy investing in people, and that's the number one thing. Is it's really about the people that we're investing in as probably the number one most important quality anytime we're looking at a business. And so you have to. You really have to kind of think through your story, and that's really, the other important component to angel investing is anytime we have a successful, pitch come in or a successful person, it's really around what's the story here? Is this the right jockey that can win the race? That's one of the more important things that we look at. Of course, there's the thousands of other things that we look at and analyze. I'll add that the other perfect client is someone that's really coachable and will really work with us, because a lot of times our investors are taking a risk, and they invest in people that they want to be in business with for the long haul. Maybe your first company isn't a success, but that doesn't mean that they'll write you off forever. If they enjoy working with you and your first company failed, they'll back you again for your second company. A lot of times the first failure, you learn a lot of lessons, and so the best time to invest in an entrepreneur is right after their first failure, because they're motivated than ever. They have a lot of learned lessons. So I could kind of go on and on about a lot of the things that we look for in a perfect client, but I'll kind of stop there and maybe can address other stuff as it comes up.
Great, that'd be perfect. And then Amy, talk to us a little bit about traditional loans and banking, and then maybe really what you look for in a client and what they need to be aware of when approaching an officer for a bank loan.
I like Dustin's analogy about a stool. I definitely want the stool there. And the reason is, when we're lending money, we're not lending the bank's money, we're lending your money. It's our customers' money that they deposit in the bank that we're lending out. So we have a responsibility to our customers. And so what I typically like to have, and what I want to see, is have a business in business for at least 2 years, to have some type of financial track record. I want to see collateral, I want to see a good credit score, and I want to see that they've gotten over the learning curve. When you first start a business, as Crystal can say, there's a lot of learning curve in the beginning. And I want to have you over that first hurdle of the learning curve. And when I have customers come in for a loan, I want you to be financially naked. I want you to lay it all on the table, and I want you to understand your cash flow. I want you to understand how the cash flow comes in, how it cycles in your business, and how you're going to repay back the loan, and what you have as collateral. And so I want you to really understand your business and your financials. Now, you don't have to be the person that inputs the financials in the QuickBooks or your CPA, but I want you to understand how the cash works, because cash is what pays the loan back. And so when you come in, I want you to tell me how this works, versus what I get sometimes is, well, I need a loan, how much can I get? I go, well, it doesn't work that way, because then obviously you don't understand your business, and you're not going to be a good risk for me to lend money to. Credit score is important. I want you to have all your ducks in a row, because I don't want you to take money from the business and put it back to you personally. So I want to have a good credit score and minimum personal debt, because like Crystal said, it's going to be blood, sweat, and tears when you still start this business, even after the first 2 years. And I don't want you to take money from the company because personally at home you haven't figured out what a budget is. And so that's what I'm looking for. And I'm not trying to scare people away. We, at Amarillo National Bank, myself, I want to be a relationship banker. I want to be in there for the long haul, not just loans, but for the whole business. So what I tell a lot of people is if you come see me, let's talk through it. You may not walk away with a loan, but you're going to walk away with what I can do for you. And maybe if I say not right now, and I can get you with some other people that are in the community that get you the capital you need, so then you can turn around and be bankable later.
Great, thank you. And at this point, I want to open the floor up to questions. Does anyone have any burning questions at this point?
So if you have, I'm with the EDC, but if you have a person that comes, I have a great bank, I have a great idea, I want to start a business, but they don't have a 2-year experience, they don't have any of the legs on your stool, where would you send them?
Well, the good thing about Amarillo is that we have a lot of agencies here to help. We have the Small Business Development Center and the WT Enterprise Center. The WT Enterprise Center has Idea Village, no, you changed the name. Hatchworks, where it's a great place, you have a great idea. They'll help you actually vet that idea through their lean startup method. And then from there, you can develop a business plan through the Small Business Development Center. And once you have a business plan, what I really like about that, then you can kind of shop your idea to an investor, to a bank, and to seek that money that you're looking for. That's a good question. Yes, ma'am.
How does an investment, like an investor, work? Multiple people have come and said, like, I'll invest in your inside of your company once you get going. But I've just never understood, as a person investing in you, like, how are they rewarded? Like, how does that payment go back towards them?
So there's two methods. One is debt, and the other one is equity. Traditionally, if an investor is going to invest in the business, though, depending on the business, they had debt, but they paid that debt back. A lot of times, the debt is an instrument called a convertible note, where the debt will then convert to equity at a later future date. And so there's a lot of intricacies between debt, the convertible debt versus equity, but and there's a lot of resources online. You can structure that very differently. And actually, there's a lot of free sources online. So there's legal documents online that you can borrow from. There's some very famous accelerators and incubators in Silicon Valley called Y Combinator and 500 Startups. And they actually publish their legal documents online. So you can go and borrow those legal documents. You don't have to pay a lawyer to come up with financial documents for you. But I think it's a good idea to have a lawyer review those for you. But again, there's a lot of intricacies with it. I'm happy to kind of talk through it, a little bit more offline. But you can do convertible debt that converts to equity at a later date, or straight up equity. At the early phase, I'm a big fan of just straight equity, because investors know what they're getting. They're kind of walking into a deal, eyes wide open. Whereas debt, it's going to convert to equity at a later date. It can work in the right scenario, but there's a lot of unknowns with it. So a lot of times it's working backwards. It's you need to have financial projections that can give you an idea of what you'll be valued at, what you'll be worth in the next year, 2 years, 3 years. And it's working backwards, and it's really understanding what you're willing to give up from your business in the earlier phases, how much you're going to have to raise in the future. So there's a lot of questions and a lot of things you have to think through to figure out which way is the right way for you, and then also how much money you need, what's the right amount to give up. There's a lot of questions you got to kind of have to consider through that. Any questions?
Yeah, I'll just piggyback on that. So for us, we didn't want to give up any part of our company to anybody. We didn't want to say, like, if you invest, then you get this percentage of our company. We wanted it to be just us. And so we were lucky enough, fortunate enough to have people that we knew that we could go to that were personal friends of ours that could back us. A stranger is probably not going to, do that and say, like, yeah, I'll give you $25,000 that you can pay me back in 5 years. That's going to be very few and far between. Once we opened up our second shop, we had people come to us and say, I want to invest. I want to be a part of what you guys are doing, which is great. And we just did the same thing. We said, that's awesome. We didn't want anybody coming in and saying, like, now we're a part of your company. We're going to tell you how to run it, what to do. So we were like, this is what we do. We did a 4% interest rate. So how they make their money, they're getting 4% back. It's not a lot, but it's more than what you could get just setting that money in a bank, kind of a thing. So that's kind of how we looked at it. I mean, sorry, Amy, but.
Well, and Crystal, to piggyback off that, the investor is looking at the company, but the company is looking for the right investor. So
Right.
can you give them any advice on how you knew that those investors were the right fit for your company? Do you have any kind of advice?
I mean,
there?
for us, it was personal connection because, like I said, they weren't necessarily buying into Palace. They were buying into us as people. So if you have, friends that have money, talk to them. But I will say one of the most important pieces when you're going to ask anybody for money is that business plan, are those financial projections? Because honestly, sometimes you're thinking, oh, I can get into coffee and make $1 million. No, you cannot. You cannot do that. Or people think like, oh, I'm going to start this business and it's going to go crazy. But when you start putting pen to paper and you start looking at your margins of like, okay, well, payroll is this much and rent is this much and all of these different things, then your margins start getting smaller and smaller and smaller. You need to go into it realistically knowing, like, in 5 years, I may still not be turning much of a profit. You know what I mean? So I would say, like, business plan and projections are, like, key. And you're going to need those things before you go to anybody. Nobody would have even listened to us if we'd have just been like, hey, we have this great idea. What do you think? No, we had to show them, like, this is our vision, this is our map, this is where we're going. And then make them almost like sell ourselves is really what we were doing,
Where do you find how can you find projections for something that's not even in this?
Yeah, it's tricky. So for us, you have to do a lot of market research. So like, who's your customer? What's your target market? You can just Google like market research and kind of look at what you're looking for, but it just kind of depends on your business. Look at if it's not here, where is it? Is it something that's never existed? Then that's going to be really hard. But if it's like, oh, we don't have anything like this in Amarillo, but they have whatever it is in Lubbock or Dallas or wherever, then study those markets, kind of study what other people are doing.
I went to the Small Business Development Center and I talked about what my idea and my plan is. And they said that Amarillo wasn't ready for it, but I could agree with that.
It could be true. We didn't think that Canyon was ready for specialty coffee either. A lot of people told us that actually, like Canyon is not going to support a coffee shop. In fact, somebody from the Small Business Development Corporation told us that. And we said, challenge accepted. But we had a very, very, very clear vision. And I will say too, that business plan, that's what saves us every single day. Like every decision that we make, we go, is this our vision? Are we doing it because our competition's doing it? Are we doing it because this, that, or the other? It's our roadmap. We stay in our lane. We follow that vision. Amarillo may not be ready for it. I don't know what it is. I don't know what your idea is, but I don't know that they were ready for specialty coffee either. And now there's 11 or something like that specialty coffee shops in Amarillo. So I don't know. Maybe it worked. I don't know.
I was just going to recommend a really great book to help you build out your business plan. It's called If You Build It, Will They Come? It's by Rob Adams. He's a professor at UT, big venture capitalist, but it's a very easy to understand. I'm on the Women's Commission, so I'm with Amy. But it's a fantastic book. I've used it myself in starting my business, but it really goes through in layman's terms how to build out your business plan, talking about testing out your market, and it's really also, the whole gear is towards what you're going to present to someone when you're asking for capital, whether it's to a bank, to investors, to venture capital. But it's a fantastic book because it literally walks you through the different phases of how to build out that plan and test your market.
And I would also recommend the WT Enterprise Center with their Hatchworks.
Yeah, Hatchworks work. And then on the other side of that too, your assumption is that Amarillo is ready for it, but there are so many resources to test that. So another book that I'd recommend is called Talking to Humans. And so like Amy mentioned, the lean startup methodology and, the build it, will they come? And so this is kind of, here's your assumptions, and that's what Hatchworks does. It helps you create a business model. And then the next part of that is validating it. So these are your assumptions. Is there a market? And you're going to go test that. You're going to talk to strangers. You're going to talk to anyone who will listen and ask them these questions. And not just, here's my idea. Would you pay for it?
Some of that already. And that's kind of hard, to get, enough people because I can't reach out to everybody in Amarillo.
Yeah. Well, and there's good examples in the book. So one of them is he has a pillow, right? And so you go to Bed Bath & Beyond and you watch how people buy pillows. Do they, put it against their face? Are they Googling reviews? So, there are other ways too, so the book gives some good examples
Thank
on
you for that.
so. Any other questions? Okay, well, let's go back to some of these. Oh, I'm sorry. Yes, sir.
So I tried to sit back there quietly, but the CDFIs never popped up in this conversation. So we're going back to this young lady over here with the future senator in her hands. When all these options may not be a healthy fit for you, you should research CDFIs, right? I sit in a 50, I'm the director of lending for a 50-man operation statewide that only serves the state of Texas. Our focus is veteran women and minority-owned business, to which we have healthy interest rates because we procure healthy capital for CRA efforts from the big banks that cannot. It just doesn't fit their business to do these smaller dollar loans, right? 0 to 350,000 plus education, right? I'm not interested in credit score. I have 15 years on the big bank side, right? So that's all about credit scores, collateral. You come to them, you're probably not ready. Us, I'm ready. I can 5%. Yes, to a 500 credit score, right? Nobody. In about 3 days, $25,000 for a 650 credit score and no material collections on your credit report, right? I can underwrite you $250,000 with 15% equity injection as a startup business day one, right? So, for the coffee shop, I wish you had found me. 25 years based out of Austin, Texas, but we are 8 offices statewide, to which I am opening Lubbock October 1. So, after I fly to Amarillo, it's Lubbock, and I will be closer to you all. But CDFIs are not just people funded. There's tons nationwide, to which we have
Amarillo's
collaboration.
fixing to get a CDFI, but people fund's very good too.
What is a CDF?
The capital,
Community Development Financial Institution, which is a designation earned by the U.S. Treasury to help underserved markets, to which we designate. And so our designation is minorities, veteran, and women-owned businesses. But if you fall out of those categories, you can still call us.
what I like about this community with all these different pieces, it helps you build your business and build your brand. And you're still going to need a deposit, you're still going to need a bank. And we want you to go and utilize these different pieces to get over that 2-year hump, and where you can start showing a profit, a positive net profit and positive retained earnings. And then once you get to that point, you can keep those relationships, but then that's a good time to come to the bank, because then we're going to be in there for the long haul too. What we're good for is financing your accounts receivable. We are good for financing equipment. We're here to help finance your inventory. But we expect you to put some what we call skin in the game. We're not going to do 100%. We want to be not really a partner. We want to come alongside you. You put some money in there, you take some of the risk, and we'll take the risk with you. And then we want to be there until you transition on your business for the long haul.
That was that 20,000 extra I needed. Amy said, you got to put some skin in the game. And I was like, okay. Do a Kickstarter.
But that's a great way to do it.
Yeah.
You have to get a little creative at times.
I asked a question about the Kickstarter, but that's like, I've seen some really good ones. I've dropped in some money. I mean, I watched one for a little small spinning wheel for $100, raised $400,000.
Yeah, there's some insane ones out there.
Dropped my jaw to the ground. But how do you put together a good Kickstarter?
I'm going to go back to what Ryan said earlier. You've got to have a story. You have to have a compelling story that people want to buy into. So you have to invest a little bit of money up front as far as video content.
How did you, because you started on a shoestring budget.
We have a friend we surround ourselves with really talented people, and then we use and abuse them. And then later we pay them a coffee and win their love back, and it's awesome. It's a great cycle that we have going on here. But we had a friend that was actually just getting started in doing video stuff. And we said, hey, why don't you come do a video for us? And he did a killer video for us that kind of showed, he showed who Palace is, but also interviewed us. We got to tell our story a little bit, and we threw that up. And then the other big component is having good rewards. So you want to come up with rewards that people want. And so, we did 10 $10 ones where you got like a sticker, and then, you know, which, who wants to pay $10 for a sticker? They're not paying $10 for a sticker, they're paying $10 because that video caught their eye. They're like, this company's cool, I think I'm gonna, you know, buy into this. We had I think whenever we did our roastery Kickstarter, we did like a coffee of the month. So we shipped coffee of the month to their door. That doesn't cost us very much money. We don't have a whole lot of overhead in that. So, you know, that was something that we could do and quickly turn around. We had a VW bus that was branded Palace that we just threw up there and we said, if anybody gives us $5,000, you can have the bus. Somebody did. I don't know why they would want our VW bus, but they did. So we just got creative with our rewards. And so the only money that you have into it is whatever you come up with your rewards. And then Kickstarter takes 5%. So and you have to set a realistic goal. That's the other thing that's important. You can't go out there and say, I'm gonna get $100,000 from people that don't know me. We were like, we need $20,000. We knew even that to us was a little bit risky to be like, we need 20,000. And then you have to work it. You can't just put your Kickstarter campaign out there and be like, all right, hope everybody does their stuff. No, I mean, we were sharing on social media. We were going to our friends. We were emailing people, hey, go give to our Kickstarter, like all of this stuff. I mean, we were working it. We were doing like social media updates and getting people excited. And then people are like kind of rooting for you, like they want you to win. And so it's you have to get people kind of involved in it, and you have to have a compelling enough story and enough media and stuff behind you that, you know, people will want to invest in it. So yeah.
And this is really for anyone. Can you talk about the importance of keeping good books at the very beginning and what that can do for a company down the road?
I'm just going to pipe in right away. I think it's important, especially if you do have some type of financial relationship with a bank or your investors or anything. You need to take control of that cash. You need to know where the cash is coming from and where it's going. And you don't have to be the expert. You don't have to be the one putting in QuickBooks. You know, if that's not your jam, then outsource it. Get a bookkeeper. It's going to be the best money spent, so you know at least the money where the money's going. But understand what those financials look like. Know what net profit is. Know what gross profit is. Know what retained earnings. Really understand what those numbers mean and what they represent for your business. And understand the cash flow. That's so important because that's going to help you. You know, maybe your margins are too thin. Maybe you need to increase your prices. Maybe you need to get lean and mean and really look at your expenses. But if you don't know where those dollars are, how are you going to understand that? And then how are you going to understand, you just know that you can't make payroll, and then you're going to go to the bank or go see someone and say, hey, I need help with payroll. And I'm going to say, well, why? What's going on with your business that you can't make payroll? We're just not going to lend the money. We want you to understand, well, I have too much in inventory. There was a great deal. I thought I'd buy in bulk, but now I'm a little short because we haven't sold that yet. But here I have inventory, and this is how we're going to sell it so we can pay you back. You need to understand that cash flow cycle.
We equate it to like if you aren't looking at your books on a regular basis, then you'll get a paper cut, and eventually you'll bleed enough that you will bleed out. And that is how businesses every day fail because they're so busy in the day-to-day operations of their business, which is also very important. But you have to look at those numbers all the time. We look at our numbers, we look at our cash flow every single week. And when I'm talking about cash flow, we say if everything cleared the bank today, what would be in our bank account? If all the credit card statements, if everything was gone, would we be able to make payroll? Would we be able to replace an espresso machine if it goes down? Would we be able to not be open for 2 days when your shop floods, which happened to us last week? So it's like we have to look at that. So we look at that every week, and then every month we sit down, my husband and I sit down, and it is brutal. Luckily we work really well together, and we have a great marriage. But we sit down and we go, okay, what are these numbers? Why was this higher this month than it was last month? Because if you get those paper cuts and you don't know that you have a paper cut, then you're eventually going to bleed out. So people all the time are like, I just don't have time for that. I'm like, well, you should make time, because if you don't, you're going to get yourself into a bad situation.
Amy, what's the best way to track cash flow? Is there a good program?
Here's
a spreadsheet.
I say all the time that I fumble my way through business, and that there is nothing that a good spreadsheet cannot help or handle. And so I have a spreadsheet because there's reports and stuff in QuickBooks that you can pull, but it doesn't show me the way I want to see it. So I literally have a spreadsheet that has like my bank account. These are what I have on credit cards right now. So, you know, you can pull up your balances due on your QuickBooks, and I just say, okay, this is my bank account, this is what I have on credit cards, this is what I have in sales tax that I'm gonna have to pay next week. And I take all of those things out, tips, because we take in tips, so I take out the tips because that's not our money, that's going to our employees. So I take all that out, and at the bottom, I have a formula that tells me exactly what we have. And that's what so I input my stuff every single week so that we know. We did a bookkeeper once, and then I got really controlling. I am a controlling person, and I was like, this isn't working for me because I needed to see. I can't wait a month to see when that credit card cleared or whatever. So I reconcile my bank account every single week. I reconcile my credit cards once a month, but I'm always putting in my receipts every week so that I can keep track of all of that. Again, the other thing too, now we have 5 locations, so those receipts pile up. If I don't need every week, I'll be in my office for days catching up. So I just make time for it. And I appreciate Amy too. Amy holds me accountable because she'll be like, hey, where are those P&Ls? And I'm like, it was on my list and I'm going to send it to you right now. So it helps to have a banker that holds you accountable and wants to see your numbers too. So.